Exela's continued strong form is a sign that shorts are starting to get crushed. But what about these $400 and $480 price targets? Hi again, everyone. I hope you're all doing really well. So, Exela had another strong performance on Wednesday, and if you watched my video last night, it was a little bit stronger than I was expecting. I was expecting maybe a little bit of momentum to go with the stock and then peter off a bit and perhaps even finish slightly down. Not that I'm trying to be bearish on it, it's just kind of I understand that right now it's going to be a bit of a choppy time for the stock. However, it performed a lot stronger than I had expected. Obviously, it jumped to an intraday high of $8.85 per share, which was basically putting it up by about 50% at one point, which is pretty crazy considering that it had doubled the day before. So that's quite big. It did cool down a little bit, however. The stock managed still to hold up quite nicely though, and finished about 6% up on the day, which is still a 37-cent gain, which does sound impressive on the surface. And again, like yesterday, it seems to be a case that the buying momentum is still definitely with the stock. And we saw this in the aftermarket, which has just finished, where it gained 21 cents or just over 3% in this session, which kind of, again, sends this suggestion that there is momentum there, which could spill over into Thursday's session. So, I'm kind of a little bit cautious on this. I don't want to be jumping in and saying that, this thing's just rocketing to the moon right now.
Send it to the frickin' moon, idiot.
I don't think it's quite there yet. I think we're in a very volatile period with the stock. And like I've kind of sort of said throughout this year that I've actually got a longer term play in this stock. It's not so much just to try and have a little short squeeze at the moment, because it does look like that there is some sort of short squeeze going on. And there was a bit of chatter in the comments yesterday, and kind of someone made a bit of a good point that we're actually kind of seeing a bit of a reverse to the short squeeze scenario, because at the moment it seems like it's a lot of institutional investors who are really pushing this stock at the moment, and it's more so the retail scene that's trying to short it. So we've kind of had like a reversal of roles in many ways. Obviously, there's like retail investors like myself and many others out there who are still kind of trying to ride the company up, but there seems to be just as many trying to get in and short the stock. Now, in terms of shorting the stock at the moment, it is quite hard to short. It's not very highly shorted in terms of percentage of the float shorted. There is only 2.6% of the float reading as short, and as of the last update I could see on Fintel, there's only 22 singular shares available for shorting at the moment, which became available in the last 2 hours of the aftermarket. So there's nothing really available to short. So it is quite tightly held, and I think that's got to do with a lot of institutions actually now holding the stock, given that there was that huge equity raise just in the first quarter of this year, where B. Riley Capital basically took like 70 to 75% of all stock through an equity raise. Now, in terms of the shorts, there is pressure on those small number of shorts. I think this is why people are pushing the stock quite a bit at the moment. The average days to cover is less than one, and that's going to intensify again today, because obviously we saw more upward pressure put on the stock, and the borrow fee to hold the short positions has actually more than doubled today. It went from just on 13% at the close of yesterday to being close to 27% at the moment. So for the small number of shorts in the stock, things are probably getting quite hot under the collar at the moment, although depending on when you open up those short positions, because the stock obviously did have a bit of a fall in like the weeks leading up to the reverse split. So it could be a bit of pressure there for the shorts. Now, other than the short squeeze and that, like another thing that's worth pointing out is that now the stock has navigated 3 days towards regaining NASDAQ compliance. And, given how high we are now, it's going to take a lot to really push the stock right down to make it fall back below NASDAQ listing requirements, and they have to start this cycle of regaining compliance all over again. So there is truly a bit of a buffer there, and I think that's giving a bit of confidence to the stock at the moment as well. Now, in terms of what the stock is actually worth right now, I've made no bones about that. I do believe that the company still has pretty poor financials. I know that they are doing things to shore this up. Like in Q1, they managed to pay down a bit of debt with some of the equity raisings they've done, and they've got more plans to do that. With the sale of XBP Europe, so like the proceeds from that is going to be used for paying down debt, and they've hinted at the stock buyback, which is my big play. That's what I'm waiting for. I'm waiting for a stock buyback. Now, so things will improve with their books, and they have sort of said on a sequential basis that the company's actually starting to go a little bit better than it was, but at least Q1 of this year was better than Q4 of last year. So things are improving there. Now, in terms of price targets, there's some chatter around that there's a $400 price target and a $480 price target out there. Now, before the reverse split, and there was one price target that I knew of on the stock, and it was one that was really old. It was a $2 price target, hadn't been updated for a couple of years, and yeah, so like it was very hard to kind of actually read into it and make sense of it, because the fact that Exela Technologies fell in terms of size of market cap meant basically companies that do research stopped following it. So you can't really put too much credence in the price targets that are out there. But using that $2 price target that I knew existed before the reverse stock split, I just want to talk through a little bit about what that really could look like today. So if you just took the $2 price target and multiply it by 200 because of the reverse stock split, yes, you would get a $400 price target. And I think that's what people can see. But that price target hasn't been updated to, reflect, recent events, which, probably also includes the equity raises, just have the automatic adjustment because of the reverse split. So if we take the $2 price target and we look at what happened to it because of the equity raise, that would actually dilute that price target quite a bit. So considering that about 70 to 80% more shares became available, roughly that's going to put that $2 price target at closer to 40 to 50 cents now. So it has come down quite a bit. Now, if we factor that 40 or 50 cents in for the reverse stock split, we suddenly get a bit of a range now. So that would mean that based on that price target with the dilution of selling more shares and the reverse stock split, we now have a range of about $80 to $100 as a bit of what the stock could be as a price target. Now, I guess we've kind of just done a little bit of an amateur valuation there. So $400 seems really exciting, but I really don't think it's going to run that high. Realistically, though, like if that $80 to $100 could happen, maybe. We'll have to see. I think that if that's going to happen, it's going to have to happen when the company is able to shore up its finances a lot more. So I think looking down the line, when that B. Riley sale does eventually go ahead, I think that's where we're going to possibly see some movements up to those higher levels. Now, just to talk about my personal play, obviously I've said it many times what I'm looking to do in the stock here, but what I quietly had done is I had set myself a bit of a price target for where I wanted to exit. When I bought into the stock, I bought in around the 7 cents per share mark, I had an exit goal. I kind of thought like this would be quite an explosive growth. And I wanted to see maybe a 3x return. So I actually had set an exit price of 21 cents per share. So adjusting that for the reverse stock split, I've kind of got an exit price around the $45 mark. So that would represent 3xing my investment. So at the moment, I'm still about 50% in the hole with where the stock is. For me to be back even, I need to have a share price of $15. And so we're still a way off just me being even at the moment. So $45 is where I'm hoping the stock could run to when this B. Riley Capital deal is finalized in August. And obviously we've still got 3-ish months to go. And, there's still no guarantee that August is going to be when that deal is finalized, if it even gets finalized. So that's kind of where I'm playing at. So $80 to $100, it does seem really exciting, but for me, realistically, I'm looking to take profit at around that $40, $45 mark, I think. Anyway, that's just a little bit about where I see the company and where I'm going with my investment. Kind of rambled a little bit here at the end, but yeah, anyway, you guys tell me what you think. Where do you think an accurate run for the stock is? Do you actually believe the $400 price target, or do you think it's actually something much more moderate? Or do you think what we're seeing right now is, maybe as high as it's going to go before any other major corporate restructuring, i.e. the sale of XBP Europe? Share it in the comments below. Till next time, everyone. May the markets trade in your favor. Cheers.